discussion going on at the domestic front right now. We've spoken about the city gas distributors to get an analysis on what you should be doing with the stocks now. We have Harshvardhan Dole, who's the Senior Vice President at IIFL, joining in, and Dipan Mehta also with us. Harsh, thank you for joining in. You've heard what the former the PNGRB member, Mr. Singh, had to tell us this morning. What are your thoughts? The key things that they're saying is they do not want to, speak about the day-to-day activities of all these CGDs. They are not saying that they're making supernormal profits, but 20% is a little too high, 15% is normal, goading them to perhaps increase their capex, etc., but will not speak about regulating their prices, so to say. Has nothing to do with the price cuts that happened. Your thoughts so far? What should one do after a big cut on all these CGDs that we've seen?
Hi. I heard the interview, and it was very nice that you called him and sought these clarifications. However, few things remain still open. See, PNGRB has awarded a lot of city gas distribution licenses through competitive bidding. And when you call for bidding, the profit and losses are at the respective entities. Regulating these profits is something that I've never heard of. It's never happened elsewhere. When you bid out a project, regulator stepping in and trying to make a comment that these are normal or above normal margins. So I don't know how it's actually going to pan out. It probably might be relevant for a couple of entities where marketing exclusivity is over, and they may seem to be making margins which are seemingly higher. But bear in mind, when these entities are investing into new areas, they are not earning even a reasonable rate of return. So the normal or above normal margins in one area are in a way cross-subsidizing the losses in the other. And time again and again, when we talk to the CGD entities, this is one common thread that comes across. So I'm not too sure as to how this whole situation is going to pan out. And despite the correction in the stock prices, till the time this issue is actually sorted out, the stocks will actually keep reacting to the news flow. And in my opinion, the market will perhaps give us a good opportunity to buy these stocks, maybe slightly later, if not now.
Harsh, hi, good morning. So it's interesting, right, that I think everybody was wondering, we're getting into election season, whether the quasi-control will come back on the oil marketing firms. But here we are talking about city gas distribution firms. It's played out differently. But do you think, this will cause some disenchantment for a while? I think you already have a negative view on Gujarat Gas. How do you view MGL and IGL right now? Just valuations, and given this completely, changed regulatory environment that we're in?
See, strictly, if you compare the price to earning multiples of IGL, MGL, and Gujarat Gas is way too expensive, and we don't like the risk reward. IGL and MGL are gradually approaching to a level whereby their multiples will start converging with the regulated entities in the power sector. For example, another 15-20% correction in IGL and MGL, and they will start trading at PE multiples of NTPC and Power Grid. And typically at that price, what we have seen is the stock prices tend to bottom out. But I think the acid test is going to be when the LNG prices tend to go up, will these companies go ahead and take a price increase? That is going to be the key re-rating trigger for the entire sector.
No, I get that. Just a couple of points, Harsh, and good to see you back on the program. One, the member of PNGRB, he kept insisting that it's about penetration. We need more penetration. But what's the connection with lower prices? I mean, is it affordability, which perhaps they see as the issue?
Prashant, actually, we had done a detailed analysis. And what we found out was, if you compare the gas market development elsewhere globally, consumers are more sensitive to availability rather than pricing alone.
Got that.
Whenever gas network infrastructure explodes or it accelerates, consumers tend to see any fuel as a convenience, and they're less sensitive to changes in prices.
Harsh, that exclusivity ending, the notice which was put up, how do you contextualize that?
See, in my opinion, there is a, as Mr. Singh mentioned that, perhaps MGL and the other entities have to apply to PNGRB for natural rollover. And that's a
Right.
regulatory process, which I'm sure these
Because
companies will do.
I thought there is a natural 10-year extension, isn't there?
So for that, you have to apply.
Okay.
There is
Okay.
a regulatory
So-
process which has to be followed.
So you're saying, okay, as far as stocks are concerned, there could be more pressure. I mean, 15, 20% more. Or you're saying if it happens, then at that level, it becomes attractive.
See, the risk reward will be much more favorable if these stocks correct a lot more.
What is a lot, Harsh? They fell 15% yesterday.
For example, what we have seen is typically IGL tends to bottom out at a FCFF yield of around 5.5 to 6%. Currently, it is offering a FCFF yield of close to 5%. So another 10 to 15% correction in IGL, and the valuations will actually be very, very attractive. I will look forward to buy a lot more IGL below 400.
Okay, we'll look forward to buying a lot of IGL below 400. That's definitive enough for us. Harsh, great that you could join us on short notice. Thank you very much for joining us. Really appreciate your time and perspective here on CNBC as you sort of guided us through this important topic.